Hi, welcome to this video today, which is all about Forex price action trading for beginners. Now, in terms of the overwhelming majority of retail traders, they want to follow price action, use technical analysis to make money from the markets. There's a huge amount of education online promoting the best price action trading strategies. You get a lot of information on broker sites as well, saying how effective technical analysis can be. However, retail traders do not make decent profits with price action trading at all. The reasons should be obvious. Okay, I'm going to go through why retail traders will not make decent profits in a moment. I'm also going to go through how professional traders use price action trading strategies and they win. Okay, and they're one of the reasons why retail traders lose. There's a lot of hype about price action trading. What always makes me laugh is any educator online saying they've got a strategy that works can never present a track record or can never do a trade in real time with specific levels of entry, stop, and target. They know the strategies don't work, but they know they're going to appeal to retail traders. Right, let's go through all these points in more detail. I've written out the points on a storyboard, so let's go and take a look at them. All right, let's have a look at why price action trading doesn't work for retail traders. Now, I'm not against technical analysis. We use technical analysis in our strategies, okay? But you've got to have other things to back up your technicals, okay? Pure price action trading, you will not win as a retail trader over the longer term. And I would recommend any beginner go and read two books, okay? One is called Winner Takes It All by William Gallagher, and the other is Why Aren't They Shouting by Kevin Rogers, because those two books will reveal to you why price action trading doesn't work. In Winner Takes All, Gallagher goes into great depth of pulling technical trading strategies apart with logical reasoning, and you'll see the logic if you read the book. It's also a great book just for beginners on what it really takes to win in the Forex markets. Why Aren't They Shouting by Kevin Rogers. He's ex-Deutsche Bank. He talks about the changes in the markets from when you used to have orders effectively transacted by pit traders. Used to shout around. I'm sure you've probably seen them on trading floors, and how it went to computerized trading. Everything computerized. And he talks about the pro traders who make money, okay, with really fast technical trading systems, okay, and how they catch out banks, and also how they make money out of retail traders. I'll return to that in a moment. But first of all, FX markets retail is 15% of the volume. That's big money for brokers and educators, okay? Trillions of dollars a day are traded in the markets. Now, in terms of brokers, they want as many clients as possible. Those clients have got to believe that they're going to win. So basically, they say technical analysis works. They very often have deals with educators where, let's say you had a broker and you give them a client as an educator. You get what's called CPA, cost by acquisition. They'll give you a set amount for getting a trader, and that can range, $500, maybe up to $1,000. That's big money for educators. And all the price action educators you see online don't trade. A huge amount of them are marketing companies. They want to sell the dream, okay? Look at the chart and make money. It's very appealing to the retail trader, Look at the chart and you'll make money. Now, in terms of, educators, they can make money by selling strategies, or they can, take advantage of what is a very lucrative CPA. It's big business, okay? Now, in terms of price action strategies, why they fail now, I'm going to go through in a moment, but I want to make the point. They used to work for a minority of retail traders before the internet. Why did they work before the internet, not now? Well, the internet made news instant to all traders. It made the price instant to all traders, so everyone could act quickly. Before the internet, you've got to remember, not everyone had the price action in real time. And certain traders are getting it quicker than others. So, for example, pit traders first, they could be the first to act. Then you've got big banks, they're going to come in next. Then you've got brokers, they're going to come in next. And traders, a small minority who could afford screens, then it's going to go down to the retail trader. So what you had was smoother trends, okay? Now everyone has the price same time. The trends are not so smooth. And the noise levels in trends are much bigger than they used to be. So you very often get in a trend today and get stopped out. Whereas in the past, you get into a trend, it would move on quite nicely for you. That doesn't happen so much today. And I think most traders who come in the markets are really fooled by cause and effect. Okay, they think the cause of the chart formations that they see and want to act on the chart come from the chart. Okay, they don't, do they? Yeah, the actual chart forms from the sentiment of traders behind the chart. You can see a lot of chart formations that work on a chart, but you don't see the ones that didn't work. And it's a known fact that several people have done this. Run any chart formation you want, head and shoulders, top, bottom, symmetrical triangles, and you'll find that or the people who've run the tests have found that no chart formation is better than random. Okay, and that should be obvious. Okay, I think if you haven't grasped what I've just said, go and look up what the clustering illusion is. It's a cognitive bias, or the Texas sharpshooter fallacy. It's where we confuse cause and effect, and we don't just do it in the Forex markets. Okay, now how do pro technical traders get an edge? Well, they do it with HFT programs. These are super fast computers. And when I say fast, I mean really fast. By the time you see the price action, okay, they could do hundreds of orders. They can act in milliseconds. Now, why is that important? Because the pros get the price action or the price first and act on it quicker than the retail traders. They can front run price. So what they're going to do is, let's say they see a breakout level, they'll push the price through the level, the retail trader will come in with them, then they'll smash the price back down again, take the retail trader out. They'll do it at news events as well, run a price up or down, then smash it back the other way. And you've got to keep in mind with these HFTs, I've done a full video on them, they're just so lightning quick. Hundreds of orders can go in and out by the time you blink your eye. And they're extremely expensive. So if you're thinking about getting an HFT, forget it. Millions, tens of millions, or even more to have one. Okay. So, the pros are making money out of retail traders. They're just doing those huge amounts of trades and just smashing in to retail traders' stops. In terms of you want to win, you can use technicals. We use technicals. We're big fans of technical analysis, but we'll only trade big levels in bigger time frames. We will also take into account volatility, so use volatility indicators, and we'll always look at the sentiment behind the chart, because the sentiment forms the chart. You make your technicals much simpler once you study sentiment. And I think a lot of retail traders also, they want to trade too short term. You're never going to win. You can never win before the internet if you're going to be scalping a 5-minute chart or whatever it is, or day trading. And also, even before the internet, all these ridiculous, pattern trading strategies are still very popular today, will never work. You can take your pick in terms of the most popular one today is Gartley patterns. It's absolutely completely nonsense strategy. And Gartley, I would like to say, did not even trade. He was a minor newsletter writer, and people latched on to his patterns after he died, but he never made any money from the patterns. Another one is Elliott Wave. He died poor. I think he died actually in a mental asylum. He felt he could predict everything in the world, not just markets. but he never made any money. You can have GAN as well. There's probably many, many more. So if you're thinking about, trading Forex price action, I would urge you not to do it. The points I've made in this video, if you don't believe them, go and read Winner Takes All and Why Aren't They Shouting? And they really bring home the reality of why Forex price action traders lose. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.